Investors have been pretty nervous lately, and it's not hard to see why. There's a real fear that we're teetering on the edge of something much bigger, maybe even a deep economic downturn. Sure, the market had a strong bounce recently, but one good day doesn't erase the damage that's already been done. That's why so many people are still cautious. My friend Tom DeMark often talks about something called a washed-out market, where assets get so oversold that they're bound to rebound. And honestly, I think we've seen that happen in a few spots, so we're keeping a close eye on those opportunities. Personally, I don't think this rough patch is over just yet. I believe we're heading into a longer period of uncertainty. Markets are looking for some kind of direction, especially from the White House, but they might not find it, and that adds even more risk. Even when you look at the latest tariff revisions, it feels like there's still a ceiling markets can't break through. So do I think stocks have a smooth ride ahead? Not really. It's going to be a bumpy road. A lot of this fear is instinctive. People are trying to figure out how close we are to a recession. And the truth is, we don't fully understand how the Federal Reserve will respond. Their tools are powerful but unpredictable. It's like swinging a hammer in the dark. You don't know what it's going to hit. That brings us to what Tom Lee has been saying lately. According to him, something major is about to impact the financial world, and it could shake the crypto market in a big way. He's specifically calling out coins like XRP, Bitcoin, Solana, and HBR as ones to watch. In today's video, he's diving into his views on Trump's economic policies, what could be just around the corner, and a few ideas he hasn't shared in quite a while. So before we go any further, do me a quick favor, hit that like button so this video gets seen by more people in the crypto community. Let's keep this conversation going. Now let's talk about something important. During all this financial uncertainty, one thing has become clear: the so-called Fed put isn't active right now. In other words, the Federal Reserve isn't ready to jump in and rescue the market until they get a better grip on inflation. We just heard this message again, loud and clear. So that leaves the market leaning on two things: real fundamentals and policy signals from the White House. And again, that's a shaky foundation because we don't know how reliable those policies will be in the short term. There's still a big question looming: can the markets actually count on consistent support from Washington? Yes, the White House has said they'll stay flexible if things start to break down, but we're not there yet. Until we see more clarity on inflation, interest rates, and policy plans, we're stuck in this wait-and-see mode. And that's why the markets are so fragile right now. The road ahead may offer opportunities, but it's going to take careful timing, smart decisions, and a close watch on both the economy and the political landscape. Yes, things aren't perfect right now, but honestly, I don't think companies are going to be hit as hard as many feared in the beginning. Even when you take a closer look at the updated tariff rates, there still seems to be a ceiling. So even though these measures are in place for the next 90 days, there's still room for improvement. It's possible we could see some easing or even new concessions that benefit US businesses. That said, I wouldn't say the path ahead for the stock market is smooth. It's going to be tough. But it's also clear that a lot of assets have already been oversold or washed out, as some would put it. What made the market reaction worse was the element of surprise. People were expecting something simpler, something a little tough but manageable. Instead, what we got were much harsher rates than anticipated, and the countermeasures were stronger too. So now the markets are adjusting to the shock. We saw a sharp drop of around 3.5% right at the opening bell. And although prices dipped a bit more after that, they've mostly held steady at those lower levels. It might sound strange, but despite how big the drop was, it's been a relatively controlled decline. Nothing chaotic, just steady selling pressure. Over the next few days, investors will have to process several key things. One big takeaway, at least in my view, is that the White House seems to be pushing the situation to its breaking point. It feels like the goal is to create enough panic globally that other countries feel backed into a corner. Then at the peak of that pressure, the US might step in and say, "All right, now we're ready to make a deal." That's just my take, but it lines up with how things are unfolding. It means the markets still have some digesting to do before a clearer picture forms. According to research from Goldman Sachs, the effective tariff rate now stands at about 12.6%, and that's applied to roughly $3.2 trillion worth of imports. That number sounds massive, and it is, but it's also close to what many experts had flagged as the worst-case scenario, which was around 15%. So we're hovering right near the upper limit of expectations. Not great, but not a surprise for those watching closely. Another thing worth remembering is that while the tariffs involve a long list of countries, almost 100, actually only a handful really matter in terms of trade volume. It might look like the US is penalizing every country under the sun, but the truth is that more than 70% of our imports come from just 6 places: the European Union, Mexico, China, Canada, Japan, and South Korea. Vietnam also plays a significant role. So even though the list looks overwhelming, the real impact is concentrated in just a few key partners. If we break it down, the trade relationships seem to follow a pattern. There's Mexico and Canada in one group, then the European Union followed by China, and finally a cluster made up of Japan, South Korea, and Vietnam. When you look at these countries individually, it's pretty clear that the US plans to handle things differently with Canada and Mexico. They're already exempt from the harshest tariffs, so any changes are likely to come through updates to the USMCA agreement. As for Japan, South Korea, and Vietnam, they're longtime allies of the US, and it's unlikely anyone wants to start a new trade conflict with them. However, things get complicated when we consider the tech supply chain. Japan, Korea, and China are all deeply linked when it comes to high-tech manufacturing, and that entire system is now under pressure. It's looking more and more like that cooperation could unravel. Meanwhile, all of this is happening as market analyst Tom Lee continues to maintain a very bullish outlook on cryptocurrencies like XRP and Bitcoin, and on the broader stock market too. He generally doesn't let trade policies like tariffs weigh too heavily in his forecasts, and to his credit, his calls have been impressively accurate so far. That said, there's one major topic Tom Lee hasn't talked about much lately: Federal Reserve rate cuts and how they might shape what's ahead in 2025. This is a key issue, especially considering the shift in expectations. At first, most people thought the Fed would reduce rates 5 times this year, but now that's been scaled back to just 2 cuts. What changed? A big part of it is how the Fed adjusted its messaging after the latest round of tariffs from the Trump administration. Tom Lee has recently shared his updated thoughts on this, and in a moment I'll play a clip where he goes deeper into the topic, so stick around until the end to get the full picture. Now let's talk about the bond market. Can we really count on it to guide us? Well, not exactly. It doesn't operate with a clear-cut formula. It's more about investor sentiment and gut reactions. There's no magic number that suddenly signals a change. It's all based on how close we might be to a recession, and we don't have a solid grasp on how the Federal Reserve will react in every situation. Their tools are broad and sometimes unpredictable. It's like trying to steer a ship with a giant paddle in murky waters. You know it moves things, but you're never quite sure where it'll land.